All right, so admittedly, the last couple of days I've been really stressed. Now, this weekend specifically, rates had just jumped again. I had been watching the news while I was getting my daughter ready for her dance competition, and I did what a lot of us do when we needed to take a break and when we're feeling anxious, and I picked up my phone and I just started doom scrolling. So my TikTok feed was full of it. So the dollar's collapsing, the banks are going to freeze, stock up on gold, buy crypto, go get your bug out bag ready. And here's the thing. So I've been a mortgage professional for 19 years in this industry, and I've seen market cycles aplenty. I know how to read the economic data, but those fear porn videos still got to me. So I put my phone down, and instead of feeding the anxiety, I did what a lot of us actually need to be doing when we need to think clearly. I started asking better questions. So what I asked was, what does history actually say about what's going on right now? How long do these things last? And do families who come out of it the other side, what do they actually do to stay intact? So that's what this video is for. So it's not fear, it's not predictions, it's just historical data and a framework for actually thinking clearly when the noise gets way too loud. So before we get into it, I want to get into the data. So I want to say something that I think is actually really important. So the videos that you're seeing on TikTok and on YouTube, and they're about the economic collapse, and they are always present, but they get louder during times like this. So they don't actually inform you, they keep you watching. So anxiety is the most effective engagement tool that's ever been invented. The algorithm has found your stress and it's feeding on it on purpose. That doesn't mean that the underlying concerns aren't real, some of them are, but there's a difference between understanding what's happening and being worked over and into a panic about it. So our team is called the Steward team. And what a steward is, and it's that word that we've built our entire practice around. And a steward doesn't panic when the environment changes. A steward assesses, he prepares, and he acts with a clear head. So that's actually the posture that I want to take for the next couple of minutes. So I want to talk about what is actually happening right now without the doom and fear soundtrack. So consumer sentiment, which is basically the measure of how Americans are feeling about the economy and their personal finances, is actually sitting in the second percentile of its entire recorded history. This means that you and I, our peers, feel worse now than they've almost felt at the beginning of every recession on record. So the other thing that I want you guys to be aware of is what's called the petrodollar. So it is the 50-year arrangement where oil was priced and traded in US dollars, which created a permanent global demand for our currency. And that system is under real pressure right now. I'll give you an example. So China processed over 55 billion in oil transactions through a petrodollar-free system in 2025 alone. And Saudi Arabia is actively rethinking its relationship with the US security umbrella that it's lived under for quite a while because of whatever's going on right now. And the national debt is actually at a level where the interest payments alone are crowding out our other spending. So the math is just making a lot of us very uncomfortable. Now, none of that is conspiracy theory. That is actually just what the data is showing right now. But here's where I want to slow down a little bit, because data without historical context is just noise with better graphics. So here's actually what history shows. So over the next couple of minutes, I'm going to give out 4 cases of what actually history has shown has happened with other countries like this. So spend some time going deep on a couple historical cases that are genuinely comparable to what the US is navigating right now. And here's what the data actually really shows. So case number 1 is Britain losing reserve currency status way ago. So the British pound was the world's reserve currency, and it was basically the petrodollar of the day. For most of the 19th and 20th centuries, after World War II, it became clear that the dollar was going to eventually replace it. So here's what the transition actually looked like for British households. It didn't happen overnight, it just kind of happened in waves. So there was painful episodes. So devaluations in 1949, in 1967, and the IMF, the International Monetary Fund, bailout in 1976, plus the Thatcher adjustment in the early 80s. So each episode was about 2 to 3 years of compression, then things stabilized, often slightly slower than the regular baseline. So the total transition took about 40 years. Ordinary British families didn't experience a real collapse. They experienced a gradual decline in what they could purchase and their purchasing power, punctuated by hard episodes. So this is likely what we would experience if we lose reserve currency status. Not a cliff, not a slope, but rough patches. So the next case study is Argentina, and this one happened within my lifetime. So Argentina is the worst case modern example. So a complete currency collapse. Banks froze withdrawals. Poverty rates went from 26% to 57% in 1 year. Unemployment hit 23%. So that's your video TikTok algorithm implying that this is coming for America. And let's actually look what happened. So it basically broke out into two different phases. So the acute phase, the part where the banking system was genuinely seized. So this only lasted about 2 to 3 weeks, not months, not years, weeks. So the economy found its floor within 12 to 18 months. And by 2025, 4 years later, Argentina's gross domestic product had recovered to pre-crisis levels. And the US had institutionalized infrastructure that Argentina simply did not have. So we're better off than they were. So Federal Deposit Insurance, the Federal Reserve, the deepest capital markets in the world, the comparison is instructive, but it's also significantly overstates what a stress event would look like. The third example is Russia in 1998. So Russia devalued its own domestic currency, and the ruble lost 2/3 of its value in weeks. Most analysis said it would take years to recover, but it actually didn't. So Russia was growing again within 18 months because of the currency devaluation made exports, primarily oil, massively competitive overnight. And case 4 is the United States in the 1970s. And actually, this is the one that's going to be closest to home because your parents lived through it. In 1997 and in 1973, Arab oil exporters cut off supply to the US overnight, and then prices quadrupled. Then in 1979, oil collapsed, and then it happened again. The result was something economists said it couldn't exist. Inflation and unemployment at the same time. So it's called stagflation. Inflation hit nearly 15%, mortgage rates hit 18%, gas lines stretched around the block, and it lasted almost a decade. So the Fed actually broke this trend by deliberately causing a severe recession, raising interest rates to 20% to wring the inflation out of the economy. The medicine was brutal, but by 1983, it was all over and we had recovered, and that followed one of the strongest stretches in American history. So here's what that decade actually looked like for ordinary households. Not a single crash moment, just years of your paycheck buying less and less. A slow grinding compression punctuated by 2 sharp shocks before we were able to find the floor. And then the people who came out on the other side intact, they didn't actually panic out of their industries. They didn't make reactive decisions at the bottom. They stayed employed, they stayed visible, and they were positioned to move when the eventual recovery came. So that's the pattern every single time. So the pattern across all 4 cases is an acute phase that is shorter than you think, and the recovery is actually slower than you hope. But the families actually came out intact, who were the ones who had a clear head during the acute phase, not the ones who knee-jerked and panicked. All right, so here's the part that surprised a lot of people when I talk about this. So my income went up in 2008, and it also went up again in COVID as well. So my income as a mortgage officer kind of is indicative of what the broader economy is doing. So generally speaking, when my income is doing well, the economy is not doing well because purchase prices on houses go down and interest rates tend to go down. So while the broader economy is in free fall, while unemployment was spiking, while all the news was wall-to-wall crisis, I had a couple of my better years. And so did a lot of other loan officers who stayed in the business and kept their head. So here's why. When the Federal Reserve cuts rates, which is a typical response to deflationary recessions, refinances flood the market, people drop their interest rates, drop their payments on their home prices also tend to drop as well, which means buyers who are priced out can finally get in again. So I know if you've been waiting to buy a house, that is good news for you. And scared and confused buyers need an advisor, not an order taker, that they can lean on with someone with a lot of years of experience who can sit across from them and tell them the things that are actually real, not just fear. Now, that is not unique to mortgage. Accountants get busier in recessions, and financial advisors who keep their clients calm build relationships that last decades. Businesses that stay visible while competitors go quiet absorb the market, and they never give that market share back. So the question is how do I survive this? The real question is am I positioned to help be the person my clients need, my neighbors need, my community needs, when it comes a time when we need clarity the most? So that's a stewardship question, and that starts right now. So not necessarily when a crisis arrives. So what do you actually need to do? So what I'm going to do with you is share some historical data that supports what you need to be doing next. So the video is telling you need to stockpile months of cash, fill a bunker with gold, and prepare for total banking collapses. That's not necessarily what the history shows, like we talked about. So even Argentina's full currency collapse, the banking freeze lasted for weeks, not months. So here's a real number that you can sink your teeth into. Based upon historical data, cases like Argentina, Russia, Britain, families who have navigated acute financial episodes had a rough 2 to 3 weeks. And it's really essential that you have those expenses covered in that time period and have liquid cash available. So 2 to 4 weeks of shelf-stable food basics, the beans, rice, those kind of things, and low exposure to variable rate debt, like credit cards, lines of credit. Usually you end up doing pretty well. And that's the preparation that the data actually supports. And beyond that, the most productive thing you can do is just really boring. Reduce your debt with variable rates. Build some income diversification, strengthen your relationships in your life and in your community. And in every historical downturn, the social capital people had with the neighbors, your networks, your community turned out to be, they mattered more than how much gold that they stockpiled. And stay employable. In every single one of these cases, the people who kept working, even at reduced rates, even in adjacent fields, they came out dramatically better than the people who just stopped producing altogether. So here's what I want you to take away from all this. The economy is under real strain. The data is real. The concerns are legitimate, and you're not crazy for wanting to pay attention. But the response to legitimate concern is not panic. It's preparation, and preparation looks a lot less dramatic than what your algorithm is trying to sell you. So 2 to 4 weeks of cash, 2 to 4 weeks of food, low variable debt, strong relationships, stay visible, stay employed, and keep thinking clearly. That's what history actually shows, not a bunker, a clear head, and a steady hand. So a faithful steward doesn't manage what he's been given by panicking when conditions change. He plans, he adapts, he stays present for the people who are depending upon him, including at a dance competition. So if this was helpful, make sure to share it with someone who needs to hear it more than they need another fear video. And if you have questions about what this economic environment means for you specifically, for your mortgage situation, that's exactly what stewards are here to do. Make sure to reach out to us in the description below.